Imagine a scenario where the stability of the global economy hangs by a thread, all because of political interference in financial institutions. This isn't a fictional plotline. It's a warning issued by none other than Christine Lagarde, the head of the European Central Bank, ECB. She recently sounded the alarm, stating that Donald Trump's efforts to influence the U.S. Federal Reserve could lead to a grave and far-reaching danger for not just the United States, but the entire world economy. And this is the part most people miss. It's not just about one country's policies. It's about how those decisions ripple across borders and impact everyone. Lagarde emphasized that undermining the independence of the Federal Reserve, which is widely regarded as the most influential central bank globally, would have cascading consequences. For instance, she pointed out that any moves by Trump to remove key figures like Fed Chair Jerome Powell or Governor Lisa Cook could destabilize not only the U.S. economy, but also economies worldwide. Speaking to Radio Classique, a French broadcaster, Lagarde explained that if U.S. monetary policy were to become subject to personal or political whims instead of being guided by objective economic data, it could create uncertainty with potentially disastrous outcomes. After all, the U.S. holds the position of the largest economy on the planet, meaning its actions, or missteps, carry significant weight globally. But here's where it gets controversial. Trump has been vocal about his dissatisfaction with Powell, accusing him of failing to lower interest rates aggressively enough. He hasn't stopped there. He's even threatened to fire Powell and attempted to oust Lisa Cook, whose legal battle against her removal might eventually land in the U.S. Supreme Court. In court filings, Cook's lawyers argued that she cannot be dismissed without proper notice or valid cause, highlighting that she first learned of her supposed termination through a social media post, a move they claim violates established procedures. Cook, whose term extends until 2038, insists that Trump lacks the authority to remove her unilaterally. This situation raises critical questions about the sanctity of central bank independence, a cornerstone of modern economics. Leading investors and economists agree that when politicians meddle in central banking decisions, it erodes public trust in these institutions' ability to manage inflation effectively. Recently, concerns over Trump's protectionist trade policies and doubts about the Fed's autonomy have driven up U.S. government borrowing costs. These developments underscore the delicate balance between politics and finance, and what happens when that balance is disrupted. Despite the heated rhetoric, Lagarde expressed skepticism that Trump could successfully seize control of the Fed's decision-making processes, particularly regarding interest rates. She noted that the U.S. Supreme Court, an institution generally respected within the country, has previously ruled that Fed governors can only be removed under extreme circumstances, such as gross misconduct. Whether Trump respects this precedent remains uncertain, especially given his history of challenging norms and institutions. Interestingly, Trump's pushback against the Fed found an unlikely ally last week, former British Prime Minister Liz Truss. Known for her brief and tumultuous tenure, Truss voiced support for Trump's criticisms of central banks, suggesting that a reckoning may be looming for these powerful financial bodies. Her endorsement adds another layer of intrigue to the debate, prompting us to ask, are we witnessing the beginning of a broader movement questioning the role of central banks? Or are these voices simply outliers swimming against the tide of established economic wisdom? As the drama unfolds, one thing is clear: the stakes are incredibly high. If central banks lose their independence, what safeguards will remain to protect the global economy from volatility and crisis? We'd love to hear your thoughts. Do you believe political leaders should have more influence over central banks? Or is their independence non-negotiable? Share your perspective in the comments below.